Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Stocks in Focus and I'm Hirol Dadia. Zaggle, that's one of the companies that we are watching out for, and this is mainly on the back of the earnings that have been accounted for. Joining us on the show is Avinash Zaggle, MD and CEO. Avinash, good morning and welcome to the show.
Good morning, Hirol. Thank you for having me on the show.
Always a pleasure to speak to you. Avinash, overall, with the way the second quarter has panned out, has the quarter met your internal expectations?
That's a tough one, Hirol. We always wish that we do even better, and that's always the endeavor, and that's always how the team and the org is thinking. But overall, if you ask us, we are happy with the results.
Okay. So you've seen a jump of almost 55% on a sequential basis on a revenue perspective. How do you see the trajectory going ahead? Because we're looking at somewhere in that range of 180 to 200 odd crores. If you have to look at FY24 as a year, is 800 to 1000 odd crores what you would be targeting then?
So Hirol, we would refrain from making specific statements on the numbers, but look, in our business, H2 is about 60 to 65% of revenue, and H1 is typically about 35 to 40% revenue, right? And you have the H1 revenues, which is about 302 crores. So you could do the math and get a range, to be very honest. But yeah, that's the nature of the business, and that's the trajectory that we're looking at.
Right. Apart from this, if you see in terms of where overall business goes, the expense side has been slightly higher this time around. And from what I read, it's mainly on the back of the client loyalty programs, employee benefits, etc., which has led to an increase in expenses. How do you see that normalizing? Because you're talking about this as the major cost centers now.
See, some of the expenses are naturally going to grow because the business is growing. We're investing. We've raised capital now, so we're going to invest in building our platform further, expanding our reach, doing more cross sell. So there's some natural progression that happens, and that's how you generate growth. So you invest in the business and you generate growth. Some of the expenses like increase in employee costs, etc., do have a natural progression because the financial year got over, and then there are certain other payouts, expenses, etc., one-time expenses.
Okay. From here on, if you have to look at the various segments of business as well, where are you seeing growth coming from? Because even from a cost perspective, your cost of point redemption of the gift cards has accounted for almost 65% of the expenses. So business-wise, how are you looking at it?
See, the strongest point redemptions, point platform, Propel platform continues to grow very well. And that's something that we are seeing throughout of the last, not just last 2 or 3 quarters, but we're seeing that consistently. The other area of very strong growth has been, Hirol, our marriage of our software platform, which is Zoyer accounts payable platform and our expense management platform, with our corporate credit card purchase card offering. We just recently announced also our co-brand with Kotak Mahindra Bank. We already have launched our co-branded corporate credit card with Yes Bank. We are also, in the coming quarters, going to launch a Forex card. We signed a robust deal with Visa for incentives to launch Forex cards. And all of that ties in beautifully from an expense management, vendor payments perspective. Right? If you're a corporate, like we just now signed up with Toshiba. Toshiba is a large enterprise customer. Toshiba, one of the things that they looked at is, hey, you've got, full suite of solutions from a prepaid card, Forex card, you do key fobs, you do virtual cards, you have corporate credit cards. So, and you have a very strong software platform covering multiple use cases like expense management, vendor payments, employee rewards, employee benefits. So people have developed tremendous fatigue around multiple apps, multiple dashboards, multiple Excel sheets that you need to download and run pivot tables to generate finally, basic insights. Our dashboard is fully integrated with, all the modules as well as, ERP solutions, HRMS solutions, CRM solutions, and you get a very holistic, digital graphic representation of, how your company is actually spending their money. So that's something where we see tremendous, traction.
Okay. So overall, if you see the B2C segment as well, that's something which is picking up for a Zaggle. Since listing to now, we've seen multiple deal wins that have come your way. How are you seeing the scale up with regards to B2B, number one? And two, where does that order book in terms of tie-ups with larger corporates stand right now, and what is the trajectory expected to look like?
So here our business is basically B2B2C, right? So we acquire corporate customers, large enterprise and mid-market customers, and through them we acquire their employees, the channel partners who are essentially users on our platform, right? So on the user side, we crossed 2.5 million, that's 25 lakh users last quarter. On the corporate side, we are at 2732 corporates. Now the focus has been around signing up larger deals, larger corporate customers, making sure that we are investing a lot of our energy, time, effort in ramping up our cross sell as well, especially now that Zoyer is doing well. To take Zoyer, and our corporate credit card offerings to our existing customers and Save and Propel. Propel being our rewards platform, Save being all about saving for employees and corporates through employee benefits and expense management. So we see the order book growing, and we see both on the consumer side through the B2B2C model as well as the corporate side.
Okay. So overall, what is the growth guidance for FY24 expected to look like? Because clearly as well, you have been targeting a revenue growth of 40 to 50% this year. Does that continue, or is that something which you will be able to overshoot as well and achieve something better? And margins have been in double digits, but we've seen some bit of a dip that has come in. So how easy is it is it going to be for the company to come back to double digit markets upwards of 10%?
First question first, we stand by our guidance of 40 to 50% growth, and we'll attempt or always endeavor to try and better that, but our guidance would be 40 to 50%. On the margins, I want to highlight, look, we had an ESOP cost about 6.72 crores this quarter again. And the maximum hit that we're taking on the ESOP cost per se was last year, which was about 14.5 crores, and this year is about 19 to 20 crores. So in the coming quarters, the impact would be lower, because I think last quarter we had about 8.5 crores ESOP cost, and now we have about 6.72. And also in the coming years, the impact would be lower. And that naturally helps our margins. If you look at our cash PAT grew by 95%, right? Our adjusted EBITDA grew up by 78%. So we are already seeing, these matrices do well, including the ESOP cost of 6.72 crores. Our, PAT, that also grew, but it grew by a small amount year on year. Quarter on quarter, of course, it grew a lot, about 270%. Year on year, it grew to about 7.6 crores. So if you add the 7.6 and if you take the cash PAT overall, you'll see that the cash PAT is about 16.7 crores.
Right. So very lastly, Avinash, what's the trajectory in terms of the next milestone that you as a company want to cross? May it be in the revenue, or may it be in terms of achieving profitability, or in terms of the customer base?
See, I think I don't want to set any specific milestones per se, Hiral. I think the business is doing well, and we'll continue to be focused, frugal, nimble, and humble. Right. So that's the mantra: to stay nimble, frugal, and humble, and be focused on delivering value to all our stakeholders.
Right. So I think, in fact, the stock itself since listing is up nearly 35 to 40% as well. So I think that's the growth story that everyone is watching out for. Thank you, Avinash, so much for joining us on the show and sharing the views, because clearly, there is something which is a buzz. You are moving to a economy which is more of a card-based economy, less of cash, and anything in and around this space is going to be a growth driver. Thank you. Stay safe and speak to you soon again.
Thank you. Thank you so much, Hiral. Happy Diwali to all your viewers and to
Wish
you as
you the
well.
same as well.
Thank
So
you.
that's the
Bye-bye.
management of Zaggle. And as we were mentioning, clearly the stock has seen growth of almost 35 to 40% clearly with regards to since listing is concerned. But moving on, another one that is in focus is Dhanuka Agri. Spectacular set of numbers is what we've seen with regards to where Dhanuka goes. And overall, from a business and a sector perspective as well, good moves coming in over there. Revenues are up 14%. Margins have seen a good improvement. Profits are up around 39%. Joining us on the show to discuss more is Mr. MK Dhanuka. Mr. Dhanuka, good morning and welcome to the show.
Good morning.
Mr. Dhanuka, overall, from a quarterly perspective, good growth coming in terms of the margins as well as profitability. What has worked this time around?
There were two major reasons. One was the product mix. We sold more quantities of the products where the margins were higher. So that was the one reason. And secondly, the prices of raw material was reducing month on month basis. But the reduction has not been fully passed on the finished product to the customer. Some margins were kept by the company. So these were the two major reasons that we had been able to show the better margins in this quarter.
Okay. So that's with regards to where the overall business goes. From here on, if you have to look at insecticides, fungicides, herbicides, which is expected to be a growth driver, because the revenue contribution from insecticides has been increasing. Fungicides has gone down, herbicides has gone down. So are we going to say that insecticides is going to be predominantly the space which is going to drive growth for the company?
Yeah, globally there is a major share of herbicides, around 48% share is from herbicides. But in India, this is around 25%. And for Dhanuka, the herbicide share is around 32%. But it depends on quarter to quarter, season to season, because in agriculture, the seasonality is there. So initially, the herbicide sales are more. So first quarter, sales of herbicides was more. But in second quarter, the farmer used to control the disease and pests. So insecticides are sold more. So again, in third quarter, the herbicides share will be higher in comparison to insecticide, but fourth quarter again insecticides will be higher.
Okay. And from a demand perspective, how is the agrochemical space panning out? Because clearly, if you go to see, that everyone's talking about an improvement that could come in the second half of the year. So is that something that you're eyeing? And secondly, from an inventory perspective, if you have to look at export markets, how do you see that?
You're right that export demand is less, and because of the inventory levels are high in the global market. So because of less exports, the reduction in the price is happening because of less demand in agrochemical sector. So I don't foresee major concern in the second half, but definitely the winter rainfall will play an important role. If Because reservoirs are not full, the reserves are around 50% level. So the government will first like to give the water for drinking, and only for if the excess water is available, then they will provide for irrigation. So that's a little bit concern, but we are confident that the rainfall will come in winter, and farmer will be able to have the good crop in the Rabi season.
Okay. So from here on, do you see contribution of margin accretive products which could be higher? And how are you expecting the growth to pan out in other products in the next 6 months?
The performance of 6 months, first half of this financial year, we hope that we will end the year with the similar performance. This quarter was exception because the highest sales happens in the second quarter only. So the second half we expect the similar as the first half, and we will definitely try to um,
Okay.
sell more products of the high margin products only. But some of the products we got very good response. We introduced Zenet and Decide last year, and Decide has become a blockbuster because demand was more. We were not able to supply as per the demand because the one of the raw material is imported from the Mitsui Chemical, Japan. So import, it takes 2 months in imports. So that's why the in spite of demand we were not able to meet out. But we hope that again the sowing of the chili crop is there, and the various vegetable horticulture crops where the Decide usage is more because it controls number of pests in the various crops. So we hope that Decide will perform in the second half also very good.
Right. So, Mr. Dhanuka, clearly, yes, the second half, probably what you're saying could be better than the first half already. Two, there are concerns with regards to where the export markets go from a demand perspective. How is the price trend looking like if you have to look at the domestic versus the global markets?
Prices of some of the molecules are still coming down because of the less demand at international level. So every month, basically, we change our prices from first of every month. And if the raw material prices are reduced, we reduce the prices and pass on the benefit to the consumer, which is farmer. And if the prices of raw material increases, then we increase our prices. But definitely international market is still dull, and we hope that it will take another 6 months to normalize the market.
So what percentage of our revenues come in from the export markets? What comes in from domestic? And how are you seeing the mix change, taking into consideration the demand softness in the export business?
Frankly, till now, Dhanuka was only in formulations, so brand sales. So our 100% sales were domestic only, except some sales to the Nepal. So, but now Dhanuka has entered into technical manufacturing also. So from Dahej unit, we will be doing the export once we get the registration in the countries where the exports are going to happen, because registration is a basic requirement for export. So we are not going to have any impact of export dull market because Dhanuka is not in export till now.
Okay. And overall, if you see from a domestic market demand perspective, are you expecting an improvement there as well? Because the MSP has been increased for Rabi crops, right, for this season. The reservoir levels are much better. So taking both of these aspects into consideration, do you think that domestic contribution and realizations could improve further for your business?
Yeah, definitely the commodity prices are all-time high, and farmer is getting good return uh, from the yield he is generating from the fields. So if farmer is having more money in his pocket, he is ready to spend more money to safeguard his crop from pests and diseases. So definitely he will use more agrochemicals for safeguarding his crops. So we definitely hope that since the farmers are getting remunerative prices for crops, they will spend more money, and the usage of agrochemicals will increase in the second quarter.
Okay. And overall, from a capacity perspective, 4 manufacturing units, Gujarat, Rajasthan, and Jammu and Kashmir, with these said and done, what's the capacity, what's the utilization, and any expansion plans?
So You see, in formulation, basically, capacity is not a constraint. Basically, with the 3 formulation unit at Sanand, Udhampur, and Keshwana, if we add another shift over there, we can basically increase our production by 50% over there. So capacity is not constrained, and by making a little bit investment in plant and machinery, in small investment, we can increase the capacities over there. That's not an issue. Capacity constraint comes only in technical manufacturing plant. So definitely in Dahej, where we have started the technical manufacturing from 8th of August 2023. There, if presently we have put up only 1 plant only, there is a space for 10 plants. So once we get any, basically tie up with any MNC, our Japanese partners, etc., then we will be putting up 2nd plant and we will be doing the expansion over there.
Right. So that's going to be interesting to watch out for. Thank you, Mr. Dhanuka, so much for joining us on the show and sharing the views. And clearly, a blockbuster performance, at least that we've seen in terms of the current quarter, and expected to continue as well with demand that could increase. 5 days, 8 to 9% is the kind of up move that we've seen on the counter. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to Beekeeper Prime.
Thank you.
Good morning, all the viewers of BQ Prime. It's always an honor and pleasure to interact with you on this forum. And today is a very different day. It's not about our businesses. It's not about our margins. It's not about our portfolio growth. Rather, it is the time to start celebrating Diwali, start celebrating the festive season. So wishing all of you all the very best, the best of health, best of prosperity, and best of anything else you dream for, and hopefully with all the best that you get, you come and celebrate in your Taj and other iconic assets of Indian hotels. We look forward to serving you, we look forward to hosting you, and we wish you the very best from all of us, your team at Indian Hotels.